Good morning, guys. It is 7:59 on Monday, the 16th of June 2025. Apologies for the short intro. I was a little late getting online, but I like to jump on just as the market opens. If we have a quick look at the top right, you will see the situation as things stood on Friday afternoon. So close at 83.98.5, which was down almost 0.2%, 0.38 at close. We can expect those figures to reset very shortly. At the present time in the portfolio, we have 23,700 odd of value. The return on investment sitting at 18.33%. We have 282 shares, and the average purchase price £70.96. And as you can see, the counter for the day has reset, ready for the day ahead's training. There's a little AI analysis just beneath there. Right, so as things stand, yes, we have been doing this for we're not quite at halfway yet, but this is going to be roughly an 8-year fire experiment or fire journey, depending on how you want to look at it. And currently we've got 3 years and I think 11 weeks completed. So it appears to be going not too badly. As I say, currently just over 18% return on investment. And of course, the thing to remember is that we're still in the wealth accumulation phase. So if you were, if you had ceased investing and the market was simply doing its thing, then you wouldn't be affecting the average purchase price at all, and the return on investment may look slightly higher than what it does right now. I'm going to take a little look at the notifications shortly, just to acknowledge the fact that the market has opened. It has opened with virtually no change. It's not even 0.1% in the downward direction just at the moment. But as I say, let's have a little look at the notifications. So top right, hit the bell icon. Goodness, there's really very little to talk about actually since the last purchase, which was 6 days ago. So I'm a little bit ahead of my target to stream every week, but I just have to do it as and when I can. So the only new notification, Adobe down 6% as investors cool on AI momentum amid strong earnings and market uncertainty. I wasn't actually aware that Adobe was involved in AI, although I suppose it's no surprise. So before we go ahead with this week's investment, I just want to bring your attention to Monzo.
I want a bank that makes money easy.
That sounds perfectly reasonable.
And you are?
We're a bank called Monzo.
Oh.
I want a bank that shows me what I spend instantly.
No problem, just give us a go. See?
Can you make splitting bills easy?
Super easy, check this out.
But it's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on.
Can I talk to a real person 24/7?
Of course.
Even now?
Yep.
Even now?
Anytime.
Can you tell me when I'm running a little low on cash?
We certainly can.
Cool. Can I afford these?
You certainly can't, sorry. Can't afford that either.
That's a real shame.
Not really. Time's up. How'd you get on?
It's a draw.
Can you help me save for my next holiday?
Oh, how about you set up a savings pot in the Monzo app called Barbados, baby?
Thanks for listening, Monzo.
We're all ears.
You can go now.
Rude. You make Monzo Monzo.
Okay, so as you can see, there is a affiliate link for Monzo in the description for the video, as well as one for Smarty Mobile. Let's go ahead and do our weekly investment. So we'll hit the buy button. If you have been following the journey so far, you'll know that each week I invest 120 theoretical pounds in the Vanguard S&P 500's exchange traded fund. This is the Trading 212 practice platform, and whilst the amount here is not dissimilar to the amount that I personally invest, I do keep my personal portfolio private for obvious reasons. The amount that we're expecting to be able to buy this morning is in around 1.43 shares, let's go ahead and preview that. So this is going to be a market buy. I'm not putting on any limits or anything like that. The market has already opened. I'm going to send that through and we'll see what we get. Okay, so we did manage to buy 1.429 shares. The purchase price was 83.93 3/4, and that has all executed. The figures on the right have updated, which gives us now a new portfolio value of 23,800 odd. The return on investment has hardly changed, still over 18%, and the new average purchase price is £71.03. If you haven't watched the channel in a while, you might be wondering what these red circles represent, although I'm sure you can probably spot the relative similarity. So the one at the bottom left of the screen is basically back in March 2020 we had the stock market fall due to COVID, and then the subsequent V-shaped recovery, which happened within a couple of months really. By the end of July things were pretty much back on track. Then at the top right of the screen, this larger circle is denoting the effect of Donald Trump's tariffs announcements. So that seems to have started around about the start of February, and possibly even slightly quicker, although I'm not certain about that. But again, you can see the V-shaped recovery, which at present appears to have kind of recovered about half the size of the drop, if you like, although it does look as if it has kind of started to level off a little bit. It's not to say that the direction of travel isn't still in a generally upward direction, but not just as steep as what it had been. So that is where things look to be right now. Pardon me. I suppose what I would say about both of those events, both COVID and Donald Trump's tariff announcements, are that they basically were market reactions to outside influences, if you like. They were kind of external to the sort of normal market ebbs and flows that we would normally see, and that's perhaps why we see the V-shaped recovery kind of so quickly, because when you get a market reaction, obviously it tends to be pessimistic, at least in the first instance, and then whenever people realize the reality, and that, I mean, let's think what happened during COVID. Okay, lots of businesses which probably were not listed would have been closed. Other businesses which maybe might have been listed, such as supermarkets and that kind of thing, didn't need to close. And then even retailers that did close were able to operate online instead. And of course then you had the other ones that actually seemed to do even better during COVID, and two that come to mind in particular would be Zoom for online meetings, and of course Peloton, the kind of online cycling phenomenon. Not sure, I haven't looked at them since to see whether they have fallen back significantly or not, but that all certainly helped to keep the V-shaped recovery going at that time. And of course the lockdowns probably helped Peloton as a sort of a unintentional side effect, I suppose. As regards Trump's tariffs, I suppose you might say the bite seems to have been, the bark seems to have been worse than the bite. Since his tariff announcements, trading terms have been renegotiated with a number of countries, and I imagine there are other negotiations still taking place. So really, the overall effect, when taken in the round, is probably not that significant. But there we go. That is pretty much it for this week. If you are interested in following the journey, why not give me a thumbs up? Subscribe even. And if you particularly like this one, give it a thumbs up. But as I say, guys, that is it for this week. Thank you for watching. Have a good week ahead, and if you're free, please come back next week for more. Thanks for watching.